With the permission of the speaker, I'm skipping the introduction over to CA.Shyam Ramadhyani.
Good morning, friends. At the outset, I would like to thank Bangalore branch for having given me this opportunity to be present here and to share a few thoughts with all of you. Presenting papers at seminar helps one to become professionally up to date, not only the delegates, but even the speaker himself. So I'm sure I'm going to benefit by the deliberations that we're going to have. I'd like this to be as interactive as possible rather than being a monologue. So please feel free to interrupt, ask any questions that you might want, or you want to add anything at any point of time, please feel free to do so. I am a student of bank audit as much as all of you. As most of you would know, that one of the most important aspects of a bank audit is the audit of advances. The advances constitute more than 70 to 80% of the total assets of a bank. And I have been asked today the way the seminar has been structured is that the audit of advances is going to be covered in two portions. I'm going to cover the audit of advances, but I'm not going to cover the prudential norms, because we have another speaker late in the afternoon who's going to speak about the prudential norms and some of the circulars of RBI. So I'm going to largely dwell on various matters, and I'm not going to directly go into the application of prudential norms. The computation of the provision for non-performing advances, I will only touch upon them to the extent it's relevant for my presentation, but I will leave it to the other speaker, my other colleague, who's going to speak about the prudential norms today. And as the President and Vice President repeatedly emphasized during the course of their inaugural addresses, I think it is time that we chartered accountants, along with doing our attest function, also try to add some value to the system. So during the course of my presentation, perhaps I will also dwell upon what areas we could, in addition to doing whatever we are expected to do in terms of ensuring the true and fairness of the financial statements. I think the regulator is expecting that we warn them about incipient sickness, where there are potentially problematic advances. And tomorrow, even as India moves into IFRS or Ind AS, where we are not going to provide based upon an incurred loss model, as Mr. Nilesh Vikram mentioned, we are also going to provide upon an expected loss model. So the early recognition of incipient sickness will become an important tool for estimating the provision for non-performing advances, even the days to come. Before I get on to my presentation, how much time do we have? Anybody from the... Okay, before I get on to the presentation, I find that many people feel that, yes, many of the institutes' accounting and auditing standards are not very relevant from the point of a bank audit. This is far from truth. The accounting and auditing standards are all pervasive, and they do apply even to a bank. Now, the first thing is that I find that a lot of branch auditors do not communicate with the previous auditor and get us no objection before starting an audit. The institute's regulation that every auditor needs to communicate with the earlier auditor and get us no objection before starting the audit would apply even to a bank audit and even to a nationalized bank audit. So the first step, whenever you get a appointment letter of a branch bank, it is important that you communicate with the previous auditor and get us no objection. Two, the way the acceptance letters communicate to the bank, most people just make it a general correspondence. But whereas there is a format given in the standards and auditing on the contents of an engagement letter, and this contents of the engagement letter apply equally to a bank audit as it applies to a company audit. So it is important that the engagement letter to the bank is issued in the format prescribed in the relevant auditing standard. I don't remember the exact number, but anyway, it is important that the engagement letter communicating acceptance where you spell out clearly what are the bank's responsibilities, what is your responsibilities, that your audit is subject to peer review, that your working papers are your property. All this, it is important to communicate clearly with the bank management before you start the audit. And please do not send a general free-flowing letter accepting the bank audit. Please communicate your acceptance in the format prescribed under the relevant standards of the institute. Next thing is, we all know that the time available to do a bank audit is fairly limited. So it's extremely important that the audit is properly planned and you have adequate information before you start the audit. So please study all available reports. Please go through the RBI inspection in case that is applicable to the particular branch, or there are any RBI commented accounts. The RBI need not, today in a system of core banking, it is not required for the RBI to physically physically be present at the branch and conduct an audit. They can sit down with the head office and they might go through any account which is there in your branch. So please find out from the bank what are the RBI commented accounts, either during the last annual financial inspection or that recent review which RBI has taken, which the Vice President referred to. So please go through what are the RBI commented accounts. It's extremely important that you are fully aware of what are the accounts which RBI has commented. And the RBI generally comments upon wherever there's a classification mismatch between what has been done by the bank and what they expect that should be done. So you know, after all, the regulator thinks that this should perhaps be a non-performing advance or should have been treated in a different manner as compared to the treatment given by the bank. It is extremely important that one is aware of the expectation of the Reserve Bank of India. Please go through all the previous statutory audit reports, the last year's long-form audit report. Please go through all the concurrent audit reports. The concurrent audit reports will give you particularly a bird's eye view of what are the deficiencies in documentation which could be there. Go through all the credit audit reports. Many banks have got a system where there's a credit audit report. So please go through all these reports, summarize deficiencies in internal control which these reports would have pointed out, and then summarize all these observations so that you know how to follow up. Because these reports are fairly bulky, they're fairly long. So you need to really summarize them and then focus attention on whatever you would like to give attention to during the course of the audit. Even before you start the audit, please obtain what are the branch head's financial powers, what are the powers that he has got to sanction loans, what are the new loans sanctioned during the year, which are the parties where new loans have been sanctioned during the year, what are the credit facilities enhanced during the year, what are the large advances on which you would like to focus attention on, credit facilities to borrowers beyond a certain threshold limit, keeping in mind whatever stipulated in the LFAR and the size of your branch and the materiality limits which you might have prescribed during your audit planning process. List of credit facilities restructured during the year. I mean, again, the Vice President mentioned how thanks to restructuring, the quantum of non-performing advance have gone up significantly, and there's a lot of change in the prudential norms on account of restructuring. I'm sure the last speaker will deal upon it adequately. Then list of credit facilities upgraded during the year. That is from non-performing to performing. What are the credit facilities which have been upgraded? Go through what are the credit facilities denominated in foreign currency, because there are a separate set of rules applicable to foreign currency loans. You've also got your accounting standards to apply for all foreign currency denominated transactions. What is the base rate prevailing during the year? So please try to get an idea about all the constituents of the bank, because every customer is different. It's not standardized. Every customer is different. So it's important that you have an idea on which are the major groups which are there. Because invariably, if there's a problem with one member of the group, this problem permeates to the other members of the group too. So it's important that you understand who are the various connected people in this in the credit portfolio of a bank. It's extremely important that you understand the core banking solution. Please, sir, I suggest, even as a branch auditor, please request the bank to give you at least a half a day's walkthrough of the core banking solution before you even start the audit. It is important that you understand what are the various data fields in the core banking solution, what are the critical numbers, what are the system-generated entries, what are the computations which are done by the system, what are the validations that are available within the system. Does the system identify the provisions required as per the IRAC norms? Does the system do it, or is it a manual calculation? What are the controls for the application of interest? So please understand this core banking solution before you actually commence the audit. Okay. Next issue is, it's important that you have a proper audit planning document. Okay, and you do a proper risk assessment and then begin the audit. As I said, it is important to understand that all the auditing standards apply to a bank audit. So an audit planning document before you even commence your audit, after you have gathered some preliminary information about the credit portfolio of the bank, plus the core banking solution, plus after you have familiarized yourself with the various reports on the past audits of the bank, of the branch, it is important that you draw up your audit planning memorandum, do a risk assessment, and then document your the audit procedures that you're going to carry out and who's going to carry out each of these procedures. Then you please select your sample of what are the accounts which obviously you cannot see every account. If there are, in a typical branch, if there are 400 or 500 accounts, it is not possible for you to ensure that you see each and every account completely end to end. It's important that you identify which are the accounts that you're going to do an end-to-end review. That means you're going to do from our sanction to appraisal to recovery. And which are the accounts which you're going to look at only from the perspective of asset classification only. Which are the accounts where you're going to check the interest application calculations? The last one is to find out what is the current status of any observations made in some other audit report. So it is important that you categorize your universe. Let's say you have 400 or 500 accounts. It is important that you categorize these 400 or 500 accounts as to what you're going to look at in each of these accounts. You might select a sample saying that yes, these accounts I will go through end to end. I will look at the entire life cycle of an advance. Some accounts I will only look at the application of the prudential norms. Some accounts I will only find out the status of what has been reported in the past. Based upon your audit planning methodology, your risk assessment, the comments made in all these various reports, you need to do this before we have not even commenced the audit at this stage. The actual audit only starts afterwards. So for that select review of large accounts, where you decide that yes, you want to carry out a full-fledged review, where would this be? This would apply to all large accounts. Plus, perhaps credit facilities sanctioned during the year, credit facilities significantly enhanced during the year. You would need to do an entire walkthrough or a review of the entire life cycle of an account. Okay? And when you're looking at this, please look at all facilities to a party together. Do not look at them in a fragmented manner. Don't do your audit facility-wise, but look at it borrower-wise. Please look at all, if a borrower has got 5 facilities, please review all the 5 facilities together. Next, if a party has got multiple affiliate companies or group companies or related parties, please look at all of them together. Because particularly it's very relevant where some credits in one party's account is coming from another affiliate's account. To regularize some irregularities there. You need to know, it is quite common in a bank where the bank sanctions a loan to an affiliate party of a customer, and that money is again rerouted back to regularize the account of the borrower. Which means effectively the bank is trying to regularize an overdue in one account through another credit facility sanction, which of course the RBI does not permit or encourage. So it is important that you look at all the credit facilities of a borrower group together. The borrower group might consist of multiple business entities. It could consist of individuals. It could include housing loans. It could include car loans to a single party. As far as possible, please try to look at all these accounts together. Don't look at them in a disparate fashion. All of us know what are the various steps in the life cycle: appraisal, sanction. All these issues are covered in the long-form audit report, which is appraisal, sanction, acceptance of sanction terms by the borrower, documentation, compliance with the sanction terms by the borrower, creation of charge, disbursement, post-disbursement monitoring, rescheduling, modification of terms, classification, recognition, so on and so forth. So each one of these aspects you need to quickly look at for all large accounts, and perhaps even for loans sanctioned or credit facilities enhanced during the year significantly. I have been asked by Mr. Pamparna that I should specifically deal with documentation to some extent. Because the other speaker is going to speak about the prudential norms. So I was asked specifically to deal with what is the documentation requirements, because please let all of us remember that the documentation has to withstand a judicial scrutiny tomorrow when a bank sues the party for recovery amounts through a legal redressal forum, through either a court or through a debt recovery tribunal. The documents obtained in the bank need to stand judicial scrutiny. Okay? There are several laws applicable to a bank. In fact, I was told by some bankers saying that there are more than 100 laws which affect the functioning of the bank and the documentation which they obtain. As we go along, I'll try to give you some examples of this. And it is not required that you have to be an expert in all these 100 laws, but it is important that you have at least an appreciation of some of these many laws which are applicable to a bank. This will be clear as we go along. Documentation is dependent upon three factors broadly. What is the nature of the legal entity? Is the legal entity an individual, a personal finance, or is it a sole proprietary business, or a partnership, a limited liability partnership, private public company? Okay, I will not go into trusts and stuff like that, HUFs, but otherwise, primarily, what is the nature of the legal entity? Because the documentation will depend upon the nature of the legal entity, as will be clear as we go along. It will depend upon the nature of the security. What kind of security is given by the borrower as far as the bank is concerned? The third one is it a consortium loan, is it a multiple banking arrangement, or is it a standalone finance? Even this will again determine the nature of documentation. The first and most important thing is that there is a sanction letter, and any modifications to the sanction letter, that this is unconditionally accepted by the borrower. There cannot be a sanction letter accepted with conditions and ifs and buts. The final sanction letter, after whatever modifications it goes through, it has to be unconditionally accepted by the borrower. And if it's a partnership firm, accepted by all the partners of the firm. And if it's a company, of course, duly accepted by an authorized signatory, the company unconditionally accepting all terms stipulated by the bankers. This is the first and most important thing that you need to understand. And later on, of course, you'll also have to understand what are the principal terms stipulated by the bank while sanctioning the loan. Because tomorrow you need to ensure that there is some adherence to some of the important, I mean, there could be many terms sanctioned by the bank, but you need to understand at least the principal terms sanctioned by the bank before you start your audit. The next one is a demand promissory note duly dated and executed by all borrowers, partners, co-obligants. We all know that the date particularly of the demand promissory note is particularly important from the law of limitation. So the law of limitation will come into place here, and so the law of limitation would be applicable here, so it's important to know some of the key provisions of the law of limitation. And then we have a demand promissory note which is to be accepted by the borrower or all partners if it's a partnership firm. And again, if there are any co-obligants, people who are jointly borrowing, or there's a co-obligant, all these people need to ensure that the demand promissory note is signed. The third one is, if it's a partnership firm, we'll need a certified true copy of the partnership deed, the partnership deed registered by the registrar of firms, the LLP agreement between the partners, the memorandum and articles of association, certificate of incorporation, commencement of business. These are key documents, particularly based upon the nature of the entity. Then we all know in a company, only the board of directors can authorize the borrowing. No individual, no managing director, even if he's a 99% shareholder, can borrow money in isolation by himself. It is the board which has got the power under the Companies Act to borrow money, and this power is to be exercised at a meeting. It cannot be by virtue of a circular resolution. Because the Companies Act says that it should be passed at a meeting. So it cannot be a circular resolution. Okay? So they should authorize, and the resolution of the board or the partners must authorize the borrowing. It must specify what is the amount to be borrowed, key terms and conditions, securities to be given, the person authorized to execute the documents. All these are to be properly named in the resolution, and you have to make sure that only they have executed the documents and not somebody else. We have Section 180 of the Companies Act, which currently applies to public companies only, but that is from 5th June 2015. Prior to 5th June 2015, Section 180 of the Companies Act is applicable even to private companies. Okay, so you need to ensure that yes, wherever, what does Section 180 say? There are two subsections, 181A and 181C. Now, what does 181A say? Is that except with the consent of the shareholders, the company cannot, the board of directors of a company cannot dispose of or alienate the whole of the undertaking, the whole of the undertaking of the company. So tomorrow when you are mortgaging all your assets to the bank, in effect, you are giving them, giving the bank the right to dispose of the whole of the assets of your company. So this requires the approval of the shareholders by way of a special resolution under Section 180 brackets 1 brackets small e of the Companies Act. Similarly, subsection C says that the aggregate borrowings, apart from temporary loans obtained from its bankers in the ordinary course of business, shall not exceed the aggregate of its paid-up capital and free reserves, except with the approval of the shareholders. Okay. If tomorrow a company borrows in violation of this, it is quite possible that they will take a stand saying that the board did not have the power to borrow. So the loan itself is invalid. I don't know really what stand a court would have taken in the matter as to where a loan has been sanctioned in violation of 180, what happens, whether the loan is, whether the company can get away without repaying it or not, but I don't know about that. But nevertheless, the Companies Act specifies that these are provisions which have to be mandatorily complied with before taking a loan. And these are prior approvals, these are not post facto ratifications. Then of course, we are all familiar with this registration of charge as far as companies are concerned, both public and private. Then documents to support compliance with section 186 of the Companies Act, where there's a corporate guarantee given. Today, for example, in the draft CARO, which is proposed to be notified now, as auditors, all of you need to comment upon compliance with section 185 and 186 of the Companies Act. So where a company has given a guarantee on behalf of another group company, the provisions of section 186 of the Companies Act will apply. There are a whole set of conditions stipulated in that. You have to make sure that these conditions are brought. The company has given sufficient data to say that yes, or a certificate from a practicing CA or a company secretary stating that they have complied with the provisions of 186 of the Companies Act wherever the bank has accepted a corporate guarantee. Deeds executed by guarantors, net worth statements, tax papers, all permissions to carry on business. Today, for example, we have, the Vice President is speaking about housing loans. Many times the problems with these housing loans are that they do not have adequate approvals and sanctions before they start construction, and the project gets delayed because of this. Copies of key agreements entered into by the borrower, all sanctions, approvals for his business. These kind of documents are absolutely essential. These are broadly the documents which are required based upon the nature of the legal entity under which the borrower is structured. Now let us look at what are the types of, how is the documentation dependent upon based upon the security. Okay, we know that broadly securities can be classified into movable properties and immovable properties. In movable properties, it could be a pledge or it could be a hypothecation. As far as immovable properties are concerned, there are two types of mortgages. It could be a registered mortgage, it could be an equitable mortgage. And the laws relating to each one of these are quite different. For example, when it comes to immovable property, let us take immovable property. First of all, whether the borrower has got an adequate title to the property. And in our country, since we do, in the absence of a uniform civil code, the religion of the borrower will have a bearing on how the legal documents could be looked at. We have a Hindu succession law, we have a Mohammedan succession law, we have got a Christian succession law, we have got the Dayabaga school, the Mitakshara school of Hindu law. So all these will determine the title of the party as far as the property is concerned, apart from various governmental approvals and stuff like that. So really speaking, the lawyer who vets your documents will have to be familiar with the Hindu Succession Act, the Muslim Succession Act, the Christian Succession Act. And again here we have various subsets within all this, and different kinds of laws applies to all these people. So while we would depend upon largely a law and advocate's opinion, but please remember that the auditing standards don't permit you to take a lawyer's opinion blindly. There is a standard on use of the work of an expert. And you need to broadly comply with this standard even when you are accepting valuation reports given by other chartered engineers, advocates who are appointed by the bank, who have opined on the title of the parties, stock statement, stock audits conducted by various CAs. You need to carry out some diligence before you accept some of these, particularly in the case of large advances. You cannot just look at the final number and say, okay, he has said there's a legal opinion, tickero. So as far as immovable properties are concerned, again, the documentation will differ if it's depending upon whether it's a registered mortgage or an equitable mortgage by deposit of title deeds. And there are various documents that one needs to collect: the mortgage deed, the original title deeds, the Kata certificate, the search encumbrance report of the the sub-registrar, legal opinion, valuation reports. All these are important to prove the the title of the borrower to these properties, and here is where the Vice President also mentioned, saying that he has found many cases in Bangalore where the same property is mortgaged by certain borrowers for multiple credit facilities. I would think that more than Bangalore, this phenomenon is present in many other parts of the country. I don't want to go into which state it is, but we have seen that in many states, obtaining multiple facilities on a same set of documents is rampant. And I think the government is taking some steps towards establishing a centralized property registry for equitable mortgages. If it's a registered mortgage, of course, we have got the sub-registrar's office where all details would already be available. And today it's good that the sub-registrar's office is getting computerized. And as far as movable properties are concerned, again, if it's the principle, of course, movable property for as far as businesses are concerned would be stocks and book debts, where there would be a hypothecation or a agreement or a pledge agreement with the bank entered into by the borrower. Again, when it comes to a pledge of LIC policies, government securities, this pledge has to be noted in the LIC's records. That this policy has been pledged to the bank, it has to be noted in the LIC's records. Similarly, if there's a demat facility or a facility against which loans are being sanctioned by the bank, against security of shares and securities, it is important that the bank's lien is noted by the depository participant, so that the depository participant will not let the borrower sell the shares and securities without getting the bank's consent. Again, if it's a car loan, you need the original RC book, duplicate keys. There are so many things which are normally obtained. So it is so we have, as I mentioned earlier, documentation depends upon the nature of the entity. It depends upon the nature of the kind of security which the borrower is extending. And third, whether it is a consortium arrangement or a standalone banking arrangement. If it's a consortium arrangement, there is usually a joint documentation executed between all the participating banks and the borrower. But this is a time-consuming process because there are 5 or 6 banks participating in the consortium. To get a common consensus of every term between the bank and the consortium takes a lot of time. So many banks, in the meantime, execute standalone documents only for their own facilities, even though it's a consortium arrangement. Okay, so you need to go through the joint deed of the joint consortium documents executed, go through all the consortium minutes to understand what the key issues outstanding between the bank and the banks on one side and the borrower on the other side. What are the key issues which are outstanding, because the consortium minutes would many times summarize the banker's concerns. One very important thing as far as consortium loans are concerned is that when you're computing the value of your drawing power, you have to only take into account your bank's share in of the total securities. You cannot take the entire value of the stocks and book debts. So, for example, if you are banking or auditing State Bank of India, and the State Bank of India has got a 30 or a 40% share in the total credit exposure to the party, the value of the drawing power which is attributable to you will only be 30%. It will not be the entire 100%. So you need to understand what are the lead bank usually calculates what is the DP attributable to each of the participating banks, and you should only take into account your portion of the security and not the entire security by itself, not the entire drawing power or the entire value of securities. This is extremely important in the case of consortium advances. If anybody has got any questions on this documentation, I'll be glad to answer, because I was asked by the branch president saying that yes, I must specifically deal with documentation, and since to ensure that these documents are legally tenable in a court of law in case the bank initiates recovery proceedings against the borrower at a later date. I beg your pardon, sir? See, it depends if it's, depending upon whether it's immovable properties or movable properties. First of all, if it is immovable properties, generally, given the tendency in India where by and large property value appreciates over a period of time, they don't normally depreciate over a period of time. So yeah, there have been instances where the land market, the real estate market has been flat or has even gone down in some occasions. But it depends upon the time period when you are doing it, depending upon your perception in the market. By and large, I think the banks update their valuation once in 3 years. As far as immovable properties are concerned, unless you have got specific reasons to believe that yes, there is a great depression in the value of in the real estate market, or the property is in some remote place, or the valuation is overstated by some means, it does not represent the real value. If you don't have any reasons to disbelieve the valuation report, generally the valuation is done once in 3 years. And even here, as a matter of precaution, you can further depreciate the value of the building every year and take only the value of the land as it is. And as far as the building is concerned, every year you can apply a further depreciation factor for the building and then compare it as a matter of caution. And if it's a marginal case, and if it's for a large facility, you might have to ask the bank to take it more frequently if required, if you think that the values of properties have gone down. If there's a large margin where the property value is, let's say, more than 2 times the value of the loan, then perhaps even if the property value has fallen a little bit, you're not too concerned. But if the property value is low, or it's only a portion of the credit facilities, and any erosion in the value of the security because of market conditions or whatever it is, can impact, then you might have to ask them to take it earlier. But as a general norm, it's usually 3 years. As far as movable properties are concerned, as far as stocks are concerned, it is obviously even something like the bank has to do this every month. While you will do a full-fledged stock audit from a chartered accountant once in a year, but as far as the bank is concerned, they have to get a stock statement from the party every month. They're expected to go and physically verify. And this is one more matter which I want to specify upon here. Many of us don't do this Godown inspection. We don't go to the borrower's facilities and premises and examine what the stocks there are. Please remember that the loan document which the bank executes between the borrower and the bank, this empowers the bank and its officers, its agents, its auditors to go and physically examine the books and records of the borrower and his premises, his facilities, what stocks he has got. So you have got a right under the loan documents to go. You cannot say, how can I go there? It's not my property. You have a right to go to the premises of the borrower, go through, ask for his books, ask for his audited financial statements, look at his stock ledger, look at his debtors, test check a few items, walk through his facility to see whether he has this kind of stocks or not. And particularly where you feel that these are marginal cases, there's an erosion of the value of securities, the unit is not doing well, I think you have a duty to visit the borrower's premises and see what is happening there physically. This is very, very important. I think the last 1 or 2 days of your audit need to get reserved for going and verifying securities at the borrower's premises, particularly for large industrial advances, and even in a few cases, perhaps even in the case of personal finances and all that, ask the bank to see that, let's say, if there's a car loan given, ask them to produce the car, or even go and see some flats. If they are immovable properties, go and see them. It will be a very good idea to do these. And what you have done should get documented, needless to add that. Yes, sir.
Giving advances against gold which was not gold. So the Prakriti Krishna Bank, that is the Gramina Bank, as well as Shumaga District Cooperative Bank, both have given advances, which has come out very well in later on police cases, etc. But what is the role of the auditor there? Because auditors have already certified. So, and valuation with even the assayers who are there. They were insiders, and it has been accepted, and the certificates are available. So in between, where do we stand in between? What is the protection for us? Should we have a professional liability insurance, or what else is available for us to secure? Is there any other method which we can insist upon, or can we insist that the gold be revalued by somebody, a central agency? Is there anything like that? Because the amount involved is quite huge.
No, I understand. I'll answer your question. First and foremost, after all, when a bank gives you a loan against gold, the gold will be in the physical possession of the bank. This will be a pledge. This will not be a hypothecation. So the gold and the gold articles will be in the vaults of the bank. So first of all, at least you can ask for a physical inspection of this gold. Okay, at least to make sure that that there is something, whether what purity, what quality, all this you may or may not be able to find out unless you have got a special attachment to gold. But otherwise, definitely you will be in a position to physically examine these gold, to examine the gold to ensure that is really there. That's the first point that I'd like to make, because gold is a pledge. All gold loans are in the nature of pledge and are not in the case of hypothecation. This is point one. Two, as far as the quality of gold is concerned, obviously we are not equipped to answer that question. We'll have to depend upon an assayer's report or a technical, an approved valuer's report as far as what is its value. And particularly, the banks may not be very keen to give loans against gems and precious stones and semi-precious stones. They might want mostly gold. So the quality of the gold, obviously, we are not in a position to find out, and I don't think if tomorrow the gold purity is not what is assumed to be in the valuation report, I don't think anybody should hold us responsible. But first of all, as far as that assayer is as far as that valuer is concerned, if for some reason he has been blacklisted, and then it is important that you do not depend upon the valuation reports given by him. If you find during the course of your audit, for example, if you find that yes, 300 crores of gold loans have disappeared, and it involves, some of them involve a certain valuer, then whenever you apply, you look at other valuation reports, even though the gold has not disappeared or you don't have any particular problems there, it is important that you don't depend upon somebody who has been blacklisted. That's the reason why I said you apply this auditing standard and use the work of another expert. If the expert's name has been tainted in the market, if you know that this expert is not reliable, then it is open to you to ask for another report from another valuer. It is open to you to do this. And anyway, though this is not relevant, Mr. Ramaswamy also asked about some insurance for us as chartered accountants. Yes, there is a professional indemnity insurance which is offered by many insurance companies, where you can insure yourself against any errors in professional judgment. As long as no malfeasance is attributed to you, there is a professional indemnity insurance which is there. This is offered both by the nationalized insurance companies as well as the private sector insurance companies. And I think it will be a very, very good idea for all practicing professionals who perform attest functions to look at this product very seriously. In fact, I think even the institute has had negotiated some favorable rates with New India Assurance Company, if I'm not mistaken. And they have policies. The premiums are not horrendously expensive. So I think it will be a very, very good idea for people to look at this product seriously. People are doing attest functions today with, as much as banks, we have, I'm told that the National Company Law Tribunal will be set up next week. And we'll also have all these, many of these provisions of the Companies Act which are going to get implemented very seriously. So I think it is time for all of us to look at these insurance products seriously in case we don't already have one. Yes, sir. What do you mean by SR value?
That's the guidance, government guidance value.
Yeah, it's sometimes safer to go by the lower of the two. But then in India we know that there's such a huge black market, and the real value of the property is invariably more than the sub-registrar value as a general rule, though I do not want to generalize. It's dangerous for me to generalize in an open session like this. But generally we are aware that yes, the real value of the property is more than the guidance value. So I don't see any mistake in principle in case you adopt a value higher than the guidance value. This is only as a general principle. I do not want to get into any specific case. I don't want people to misinterpret what I'm saying. I don't think there's anything wrong if somebody accepts a value which is higher than the guidance value, provided, of course, there is a valuer who appears in the bank's panel. He has certified clearly that this is the rate at which he has taken. He has given you the basis on which he has adopted this rate. He quotes actual transactions which have taken place in that particular area, and he says that transactions have happened at this rate. There should be no objection in principle if somebody goes by a value higher than the sub-registrar's value. But of course, You'll be playing safe if you go by the lower of the two, saying that, yeah, anything which happens in number 2 account, it is not there. I will only go by the official valuation, the officially registered valuation. I think that will be a very, very good thing for all of us to take. Saying we would like to go by recorded values of transactions rather than what has happened in a black market. Any other questions, sir? Anybody from organizers here? Huh?
Most of the banks have the system of getting their documents vetted by the panel advocates or their own legal department. So would it be all right if you go by the opinion given by the advocate?
As long as you apply the auditing standard on the work of another expert.
Yes.
You cannot blindly just accept any value, any report by any third party. Fortunately or unfortunately, our auditing standards don't permit this. Whether it's an actual valuation of gratuity, leave encashment, whether it is a legal opinion, whether it is a legal opinion of title, whether it's a valuation report, you cannot just blindly go by what he has said. And even where there's a valuation report, if he has expressed some limitation saying that these are documents I have not seen, or clarify this and then subject to this I'm clearing, then you need to ensure that many lawyers do not give a total unqualified clean opinion. They put some caveats, ifs and buts. Then you need to ensure that these caveats are really addressed. And we have a standard on use of the work of another expert. You need to ensure that you exercise diligence as per that standard.
There are no qualifications in the reporting. You can go by that.
Yeah, you can, by and large, we all have to go by it. It's not that we don't have to go by it. But if in specific cases you feel that after having recourse to the standard, you feel that you cannot depend upon this valuation report and the facility is large, you might have to ask the bank to get you another opinion expressing your specific fears. Now, sir, let me get on. I don't have too much time. Let me cover the other areas. I'll take this question later, sir. Another very important area is the post-disbursement monitoring which the bank does. And here is where I think chartered accountants can add a lot of value to point out any case of incipient sickness and of potential NPAs. Okay, if a bank has classified an NPA account as NPA, then it's more likely than not that then the arithmetic is done properly. You don't recognize income, you only take them on cash basis, and then you ensure that yes, you make provision based upon substandard doubtful loss. It's more likely than not that this is done properly. The problem comes where there are gray areas either in the application of the prudential norms, or there are possibilities of incipient sickness. And I think one place where we can do also value add is where you can identify some incipient sickness depending upon varieties of factors which I have listed out here. Okay, I don't want to go into each item, and it's one very important thing would be this end-use certification by auditors, that the money that has been given to the party has been utilized for the purpose for which it's been sanctioned. There are a whole lot of steps which I've written here. I think there are 2 or 3 other areas where you need to particularly focus attention on. Units which have not commenced commercial operations. Okay. Where companies are still in the project stage, even though they're repaying their loans, even though they're servicing interest out of some other funds, but the unit has not yet commenced commercial production. This is one very gray area. There are, and in our system, there are a lot of delays in completion of projects. The prudential norms have given certain time limits and some time frames within which the bank can extend the DCCO. I'm sure later on this will be addressed in greater detail during the later session, but it is important that you identify cases where commercial production has not commenced. Obviously, if commercial production is not commenced, there is very, very, very good chance that there will be a default at a later point of time. So it's important that you look at very closely all accounts where the company has not yet started commercial operations, or it has achieved very low capacity utilization. Okay, it's important that you focus attention adequately on these items, and there are time and cost overruns in the implementation of the project. 2, where the second area where you really need to focus attention on, where there's been some kind of restructuring in the past, that is prior to 31st of March 2015, where the account is restructured and the account is classified as performing because of the then prevailing prudential norms. Today, just to give you all an update, most of the regulatory preferential treatment for restructuring has been removed with effect from 1st of April 2015. Barring 1 or 2 exceptions, all restructured accounts are to be classified as NPA. Okay, till 31st of March 2015, there was a regulatory exemption, special treatment given wherever you restructured. This is one of the reasons for the huge spurt in the NPAs by banks. It is not that all auditors made mistakes, just like what the Vice President pointed out, because the norms have changed during the year from 1st of April 2015. Okay, insofar as the old restructuring cases are concerned, that is loans sanctioned prior to 31st of March 2015, where the bank classified an account as performing because they had sanctioned a new program. It's extremely important that you look at whether the restructuring has been fruitful. After all, a restructuring involves a series of matters, and whether this restructuring yielded results or not. And if it becomes a failed restructuring, then as per the prudential norms, you need to go back and adopt the old NPA date. So in this, I think I would like you to focus attention on 2 or 3 areas. One is regarding cases where there's been delay in commencement of commercial operations. 2, where capacity utilizations have not yet been achieved. The capacity utilizations are extremely low. 3, cases where the accounts have been restructured, and you need to go into what has happened and what are the results of the restructuring. Whether the restructuring has yielded results or it's been another failure case, and the party continues to have its problems. So please try to identify, if you come across any case of incipient sickness, early warning signals, it'll be very, very productive for you to point out all this in the long form audit report, though you may have no reservations right now as far as the application of the prudential norms are concerned, because we are still on an incurred loss model as far as the provisioning for NPAs are concerned. I've listed several early warning signals which you should keep note of. A copy of my presentation is here. This credit summations, debit summations again are very, very helpful for you to find out, because ultimately the credit summations they should represent your realized turnover. If tomorrow a turnover of a company as per its account is 100 crores and the credit summations in the account are hardly 50 crores, it means that either the turnover shown in the books is bogus, or money is the party's got multiple bankers, and money is not coming into your bank. So these credit summations will give you a good idea as to what is the realizations of its debtors, barring in case of any loans taken, share capital brought in. Otherwise, the bulk of the credit summations in any bank account would represent your realizations from your sale of goods and services. So if you take a credit summation report, let us say for 15-16, and your debit summations for 15-16 month-wise, there is a ready report available in most core banking solution giving you the credit summation and debit summation on a month-by-month basis. This can really help you to find out whether many of the figures stated in the accounts are correct or not. A quick appraisal. And after all, from the books you can find out sales minus closing receivable plus opening receivable will give you the realizations. What is the kind of gap between all this on a very quick and rough and ready basis? It's important that you ensure that, yes, the interest rate changes, particularly in the base rate, are recorded properly in the core. I'll just take another 5-10 minutes and then I'll close. It's important that all the base rate changes are properly captured in the core banking solution. This is usually incorporated on a global basis at the head office. It is not done at the branch level. And the branch would only be say that, yes, what will be the interest formula as far as a particular borrower is concerned? How many basis points would he be above the base rate? So it is important for you to audit the information in the interest rate masters. And you can merely take 3 or 4 accounts and check the actual calculations to make sure that the interest rates are being applied, the interest algorithm is working properly. And when you're going into the interest algorithm, please ensure that the penal rate of interest for non-submission stock statement, penal interest for non-renewal of facilities, all these are also taken into account. It is not merely the fundamental rate. Because the bank charges you penal interest depending upon a variety of circumstances, like if you don't submit a stock statement, the interest rate goes up. If you don't submit your quarterly information, your interest rate goes up. You've got a rating system based upon which if you don't meet your targets, the rate of interest goes up. It is important that all these are applied and not merely the fundamental rate. Okay, and if there is a bank where today more and more people are shifting to a floating rate of interest, so the base rate updations need to be captured properly in the core banking solution. Another item on which I would like to touch upon is the interest failed report. The core banking solution, for some reason, fails to apply interest to a party's account, to a borrower's account for some reason on 31st of March 2016. Okay, for some reason, some borrower's accounts, the interest is not at all applied. So the bank has got a report called the interest failed applications. So if you ask for this interest failed report as on 31st of March 2016, you will get a set of loan accounts and as well as even deposit accounts where interest has not been applied. So you can then go through these accounts to find out what is it that has happened. Have they applied it subsequently? They have not applied it subsequently. Subsequently means I don't talk of 31st, beyond 31st March. I'm talking of before 31st March. By subsequent, I don't mean after March. Because the interest application might have been run on 29th of March. They might ultimately, they might do it on 30th, they might correct the situation on 30th, or even afterwards they might correct the report and then make sure that the interest is applied, or they might even pass a manual entry. So please look at this interest failed report. And just like the Vice President is saying, yesterday I've got on a WhatsApp, I've got a message giving almost 200 reports which are available in most core banking solutions. I got a professional update from somebody saying what are the various reports available in a core banking solution. Okay, it could be on Finacle, fine. I'm sure there are similar reports in non-Finacle applications too. But if you look at this and you could look at what are the portions of these reports which are attributable to, which relate to advances, and to what extent it would be of interest to you, and please use these reports carefully. I've even heard that, and please be very circumspect when you accept any reports in Excel sheets. It is possible for somebody to correct some data and then give it to you. Okay, I have been, yes sir.
Whether the bank is charged any amount or any quantum of stipulation that value is charged for 3% for various defaults.
There are RBI guidelines. I'm not honestly up to date as to what are the RBI guidelines regarding the quantum of penal interest.
Suppose they keep charging on each item, so it goes beyond 3%.
If there is a cap stipulated by RBI, we'll have to observe that cap. I'm not sure what that cap should be. Whether the cap applies to every type of penal interest, I'm not very sure. But you have to ensure that if there's a cap stipulated by RBI. Fine, fair enough. If they are the facts, then you have to ensure that yes, the interest is not applied beyond that rate. Another last important issue is that as far as even though the prudential norms don't apply to BGs and LCs which are not devolved, please remember that your accounting standard 29 applies to even contingent liabilities if there's a probability of devolution. If it's probable that these contingent liabilities will devolve, you need to recognize a provision. So even though the prudential norms don't apply here, so if there's a business which has stopped, but they have got LCs which are going to fall due in future, these LCs will become NPA at that particular point of time. The accounting standards require you to recognize this provision right now and not wait till those LCs devolve. Okay, so you need to ensure that yes, particularly where goods have already been supplied or even today the business is not running. So even if the goods get supplied, you can't use those goods. It will be important that the probable liability on account of LCs and BGs which might devolve in future are tested under AS 29. The last thing is you also need to do an analytical review of the trends in the trends in interest received, yield and average yield and advances, movement of NPAs, provisions. You need to do some kind of an overall analytical reviews to make sure that compare the average interest, the yield and advances for the current year versus the yield and advances for the last year. What is the variation? The variations are properly explained. You have to review the NPA movements. First of all, what are the opening NPAs? What are the fresh NPAs during the year? How many provisions have been? how many NPAs have been upgraded? How many NPAs have been recovered? What's the closing NPA movement? This is both the NPAs as well as the provisioning, as well as the provisions. You need to review these movement of all these things and carry out overall analytical procedures. You also need to look at forward contracts entered into by the borrower. The forward contracts could be to hedge his exports, it could be to hedge his imports. You have to look at these forward contracts. And here please ensure that there is an underlying trade transaction below this, these derivative instruments. In India, the banks are not permitted to open any derivative instrument for speculative transactions. There should be an underlying commercial transaction, a trade transaction below every derivative instrument. And the auditors of the borrower are expected to furnish a certificate every year stating that there are that none of the derivative instruments entered into are for speculative purposes, and that there is an underlying trade transaction. Similarly, for all imports and exports, where the bank has given finance or even acts as a collecting agent, you need proof to ensure that the goods have been either exported or have been imported, that the goods have come, particularly where you have made advance payments. Tomorrow the party needs to give you proof to show that yes, the goods have in fact come. This is not a bogus or a fair, this LC was not used for money laundering, where you just made a remittance for imports and the goods never came in afterwards. And this is a foreign exchange management, this is a FEMA requirement also, please. Okay, and there it goes. As far as the reports are concerned, please be categorical in your reports. Do not make general statements. If you feel it is required, please meet your central statutory auditor, and I'm sure most of them will be happy to meet you and clarify any issues. And if you have any concerns, please bring it to the notice, preferably in writing. And then the last issue is that we also probably need to analyze the impact of ICDS as far as banks are concerned. The latest income computation and disclosure standards, which are applicable for tax computation, will be applicable even as far as banks are concerned. And in case a bank has not recognized any income on accrual basis, because I think certain fee-based income, the banks still continue to account them on cash basis, which is again violative of both AS1, AS9. And they account the entire money on receipt, even though it relates to a period of time. This is strictly against the accounting standards. And the central statutory auditors will take a view whether this is a material mistake or not. And if there are any cases where the bank has not recognized an accrual basis for a performing advance, I'm talking about, not for a non-performing advance, you might have to bring this out, because this might have an impact on the tax provision. I'm sure much before September, the CBTD will change Form 3CD, bringing in all the rules regarding ICDS. Of course, in the case of banks, these reports might have already been issued, and the bank will take a view how to handle this matter. I think I've come to the end of, I don't have any more time, but if anybody has any questions, they're free to even call me or even send me an email. I'd be happy to answer them. I'd like to again thank all of you very much for the opportunity given to me. I've enjoyed being here. Thank you very much.
Now we have come to an end of excellent first session. Sir has explained in a very simple and understandable manner. Give him a big round of applause. I thank on behalf of Bangalore branch of ICA. May I request CA Divya, our committee member, to present a memento to the speaker as a token of appreciation and respect. Thank you, sir.